Zee Entertainment is in the spotlight in today's trading session, and that's largely on the back of the fact that the Competition Commission of India, or the CCI, has given the conditional approval for the Zee Entertainment merger with Sony Pictures, which is now known as Culver Max Entertainment. This is subject to certain modifications according to the CCI, the approval. And along with Zee, you're also going to have Bangla Entertainment Private Limited, which is an indirect-wholly owned subsidiary of the Sony Group corporation, which is going to be merged with Culver Max Entertainment. Now, this has not been a question of if, but a question of when that the approval would actually come through, given that the CCI had flagged off concerns regarding a dominant market position, with both of the companies owning a healthy market share in their genres, and having a monopolistic pricing in terms of ad rates. Now, what we understand is that the channels the combined entity will look to turn off one of their channels in order to have switch off one of their channels. It could be a smaller channel from a niche rural genre, say like a GEC like Bangla, and therefore that would reduce their overall market dominant position. Now, Zee Entertainment has gone ahead and said that this merger is going to generate immense value for all the stakeholders. It's a positive step coming in with the CCI approval. Culver Max has said that they await the remaining regulatory approvals in order to launch the fully merged company, and this is going to lead to a complete transition away from traditional pay TV to the digital future. Now, do remember that you also have Puneet Goenka, who is going to be the combined entity's managing director and CEO. And analysts are also saying that this is going to create the largest entertainment network in the country. It's going to be a formidable player or a serious contender to replace Star and Disney. There's going to be a lot of combined synergies as well that will take place, like ad price hikes, content, marketing, better cost savings on those fronts, better bargaining power in general. Sony has a dominant position in the GEC segment as well as in sports, and Zee has a great recall in the regional space, so there's absolutely no overlap between the two companies. Now, as per the BARC data, Zee and Sony's total viewership combined was about 24% as of FY22. The viewership share across genres for them is below 40%, except for the movie genre, which is above 50%. We also spoke with Abneesh Roy of Edelweiss, and he is of the view that Zee is, as a stock, could give a 30 to 40% upside over the next 12 months, as the merger is going to be complete by then, and then corporate governance issues as well are likely to be resolved by then. And it's going to be the merged entity which will be dominated by a Sony-dominated board, and ad revenues as well could likely return. He believes that there's not going to be any major issues due to the conditional approval by CCI. Maybe there'll be minor adjustment in the tail of channels in a few genres, and unlike a cement merger, for example, where assets needed to be sold, in media the content is what is more important rather than the channels. He said that the second half of FY23 is going to be better for Zee than the first half in terms of ad revenues. There's also going to be the voting of shareholders that takes place on the 14th of October, and no major issue is seen there. There are also close to 90 channels, so maybe the shutting down or the divestment of a few channels in Hindi movies, rural GEC, Bangla of the merged entity, he believes is not going to make much of an impact.